I wouldn't want to give you a textbook definition, so I will just go ahead and explain it with examples. So imagine you're building a house, right? And then to build a house, you need to lay foundation for the house. I mean, there are different types of houses. You could be building a bungalow. Now, if you were thinking of building, say, a 21-story building, for instance, and then you lay the foundation as if you were building a bungalow. What happened? What do you think will happen? It means at the time when you start adding more floors to the building, it's likely going to come crashing. Right? So if you were thinking of building a skyscraper, you would want to lay very solid foundation from the get-go. You want to make sure that the necessary pillars are put in place to be able to hold the structure as you add more floors to it. That is what being future-proof looks like. Now, to bring it down to banking infrastructure, to build a banking infrastructure, there are certain components that you cannot overlook. There are certain shortcuts that you can't take. So you would want to build out those fundamental components that will ensure your survival. Now, I'm using the word survival here, not success, because you first of all need to survive before you can be successful in banking. Banking, when you're building a payment infrastructure, banking infrastructure is a very critical domain where little mistakes can have very, painful impact. So you want to think about the different components that you need that will ensure your survival. And then you make sure that those components are built properly. Now, once you've built those things properly, what happens is as you grow, it becomes easier for you to add things on top of it. As the market moves, you are able to respond to those changes without having to tear down what you've built in the past. And I'll give you an example or some examples. When you talk about banking, you know security is a critical component of that, right? So you want to be able to build out your infrastructure in such a way that you are at least secure enough to protect the customers that will be using your infrastructure. Now, there are different ways to look at it. One way of looking at it is thinking about authentication and authorization as a component, one of the fundamental components. And you could just decide to, and this is just an example, it doesn't mean you have to do it that way. You could just decide to build, say, an OAuth server that handles your authentication and authorization, and then make sure that that OAuth server is built properly. Then every other service you're using, which you can call resource servers, these are people you want to protect. As you're adding more services, they wouldn't need to worry about authentication and authorization anymore because that foundation has been laid. What they need to do is take advantage of what already exists. And in some cases, you might need to evolve that particular module to meet new business objectives. But then the evolution will be done in such a way that the people using it will still be fine, or even better off after you do the upgrade. So that is what building a future-proof infrastructure looks like. Now, I'm looking at it from just the perspective of tech, but there are different perspectives to it. There's a business angle to it because whatever you're building is meant to support the business in meeting their objectives, right? So you need to think about what the business needs, where this business will likely go in the future, and lay solid foundation that would help them get to where they are going. Foundations that will also help you to respond to the ever-changing business needs that will come up down the line. So to summarize, it's more or less thinking clearly about the components that you need to survive. And I have to emphasize on that word survival because here it's about survival first and then building them properly, anticipating some of the things that might come up in the future. You can't predict the future, but you can anticipate certain things and lay the kind of foundation required to help you face that future without fears. There's one other example I'd like to give before, I end the topic fully. When you look at banking, banking does a lot with financial transactions. If you're building a banking infrastructure and you don't think about, say, the integrity of those transactions, like you don't build that into the system, you're setting yourself up for failure. Because when people use the application, let's assume I have an account with you and I do a transfer and you debited me, and then the money didn't get to the destination and you don't reverse the money. And then when I come to you, you tell me you can't find the transaction. Money has left my account. No, you're going to damage your reputation. The customers will lose confidence in the business, in the product. So these are some of the examples of what it means to pay attention to the fundamentals of what you're building and building them properly. So you need to lay those kind of foundations and avoid taking shortcuts that can actually lead to your failure down the line. So that is what it feels like. I mean, what it looks like, when you're talking about a future-proof infrastructure. Yeah, so when it comes to trends, I'm a bit circumspect because trends come and go. I personally believe that chasing trends might not be the best strategy. However, I have to acknowledge that as a business, you have to pay enough attention to trends so that when there's value in those trends, you can take advantage of them. Now, taking advantage of trends is something that you have to be very, very deliberate about. You might see value in a particular trend, but it doesn't mean you have to pursue it. So the point is being very sensitive or paying enough attention to know if a certain trend is valuable to you as a business, because not every trend will be valuable to you as a business, obviously. So pay enough attention to know if a particular trend is valuable to you, then make a deliberate decision on whether you want to pursue it or not. And from where I stand, pursuing a trend should be something you're very convinced about after you've done your experimentation to know that this is actually going to add value to what we're offering our customers. Now, having said that, before I go into some of the trends, I have to, lay some foundation just to help guide the conversation. Trends could be in two categories, just broadly speaking. There are some trends that are just old ideas in new clothing, and there are some trends that are pace setters, right? So from a banking standpoint, banking infrastructure deals a lot with fundamentals, right? Maybe you would have seen it that banks might tap into certain trends, but the fundamentals of what they offer, it doesn't change that much. It doesn't, it evolves, but not that drastically. They typically just add to it. So where I'm headed is this. When you realize that certain trends are just old ideas in new clothing, you will be able to make an informed decision whether you should adopt that trend or not, because you might already have it, but in a different form. Let me give you a practical example. Some of the critical selling points of blockchain are things like immutability and decentralization. Now, when you come to banking, you realize that immutability is not a new idea. A well-built core banking application has to offer a level of immutability because your transactions or your ledger entries are more like being appended. You can't modify a record that has been posted already. You simply append to it. If you want to effect a change on an account because of a mistake that was posted initially, you have to post a new record to make that change take effect. And the systems are typically built to prevent the possibility that somebody can modify something that has been posted already, which is immutability, right? I'm sure you must have also heard of BitTorrent. BitTorrent allows you to share, is a peer-to-peer protocol that allows you to share files. So in a way, there's decentralization from that perspective. So when you think about these things from that perspective, you know that, okay, some of these ideas are not things that are new. Now, it doesn't mean that blockchain doesn't have value to offer. That's a different conversation. I'm merely making a point that you have to be conscious of what value that particular trend or that particular trend offers you as a business before you start adopting it. So when blockchain came, some people took advantage of it from different perspectives, and big businesses have been built out of it, which is excellent. If you are going to do that, you have to be deliberate about doing that. You don't just jump on it just because others are doing it. Otherwise, they can succeed and you might not because you don't know what you're doing. You're just jumping on trends. But once you're fully informed about what exactly you're doing, then you're able to fully take advantage of some of the values that these trends give you and offer your customers better experience. Now, speaking about how do you adopt certain trends in the banking industry, I can give you an example of some of the ways you could take advantage of certain trends. Some trends are based on geographical context. There's a geographical context to certain trends. For instance, in the Nigerian market, African market today, let's say Nigeria, there are people who are thinking about contactless, for instance. But in some other markets, that is old. They've been using contactless for God knows how long. So for us in this ecosystem, we would consider that a trend because it's something flashy coming on board, which we haven't been used to. So your situation will determine the kind of trends you adopt. Now, to give an example of some of the ways you can take advantage of these trends, I mean, I've laid the foundation of how to decide what to do when a trend comes up. Pay enough attention to know if there's value in it and be deliberate in knowing whether to pursue it or not. If you do that, based on your own situation, you will know the trends to adopt and the ones not to adopt. Now, with regards to an example, you know today Gen AI is everywhere. Everybody's talking about it, right? You know, and from my perspective, I've seen value in it for the banking sector, but this value is beyond banking. It's something that anybody can actually take advantage of. An example is building a very intelligent customer support experience for your banking customers. Today, one of the ways that we support customers are they call and somebody picks or they chat with someone or, if you have an AI model that understands your business deeply enough to support your customers. When a customer complains or creates a ticket, you could have a model that can go out of the way to solve those problems before the customer, before even the human agents are able to attend to it. That's one. Another aspect is imagine if you build a model with still the same deep level of understanding of your product. And alongside understanding your product, this model is also studying the behavior of your customers. And just to give you a practical example, maybe this particular user sends a certain amount of money monthly to a particular account or a set of accounts. And you have this, you're able to identify this behavior, key behavior, and you could have the AI prompt the user to say, hey, do you want to schedule these transactions? And the user will just say yes. And the moment the user says yes, the AI goes along to create the schedule and everything. So the user doesn't have to go through the process of discovering that you can schedule a transaction. And the user doesn't have to even go through the process of doing it, themselves. They only need to give the approval to say yes or no, and then it happens. So something like this is a way to improve the experience of the user, within your system. Yeah, so I think one of the biggest is the fact that you can't predict the future. The future is unpredictable, and when you're building for the future, you have very little leverage with regards to knowing what the future will bring and building for that. Still, your best bet is to lay very solid foundations. And then when you lay those foundations, you don't need to have the bells and whistles, right? You don't have to have a comprehensive product initially. You just need to have enough capacity to prepare for whatever comes. Then the next thing is you now need to be very nimble to be able to respond to those changes, those challenges, because things will come up, things you didn't anticipate to come up. And that's one of the biggest challenges, the fact that you can't even predict the future. So if you lay a good foundation and you're nimble enough to respond to those challenges as they come, then you have a better chance of surviving, right? And also being successful. One of the key things is be nimble enough to change your mind. And consequently, sometimes you might need to change direction the moment the facts change. You may have built for a certain group of customers. Then you realize that the future is not bright here. What do? You don't try to die there. So in that situation, the best thing for you to do is find a way to pivot, if possible, to something more lucrative. Now, the second problem is availability of talent. You have to acknowledge that building the banking domain in some aspects requires specialized knowledge. And some of these talents are not readily available out there. Now, if you bring in someone new, there are certain things you can't see on Stack Overflow. There are certain projects you'll be working on. If you go on Stack Overflow, you won't find anything that will help you solve a problem. You could actually be stuck for a very long time. You might be very smart and driven, but sometimes it's not enough, especially when you're building things in these domains that are not publicly and are not so easily accessible. Now, how do you solve that kind of problem? One of the ways is if you're starting afresh, try and find the kind of talents you require, even if it's just one or two, who can help in laying the foundations that you need. Another thing is training, obviously. You can train once you have people with the capacity within your team, you can easily train them, send them to specialized trainings if you can afford it, because sometimes some of the providers you're going to be integrating with, they provide training services because they know that their knowledge is not easily accessible out there. So you could send people to those kind of trainings and prepare them for the future. But you have to be aware that even though you've trained someone, doesn't necessarily mean that they will become productive immediately. Sometimes it takes time. Even after the training, you will still run into blockers that will keep you there for some days or even weeks or months before you're able to solve the problem. If you prepare for the future and you're nimble enough to respond, then the problem of not being able to predict the future, that can be alleviated. Then if you get the right talents on board or train the ones you have, then you will be better off with regards to the kind of having the right talents for what you're building. So when you're building a team, right, you want to create an environment that fosters a level of autonomy, right? Because if you are micromanaging, for lack of a better term, if you're micromanaging your resources, you're going to stifle the ability or the opportunity for them to innovate, right? So you have to actually create an environment that allows autonomy so that people can learn, make mistakes, learn from those mistakes, and get insights that will help them come up with innovative solutions. Now, fostering this also implies, from the perspective of those in the team, having a sense of extreme level of ownership, because you can't push things or have the autonomy you need if you don't have a high level of ownership, a sense of ownership. That means you see this thing as your thing. The reason is the mindset of the people working determines how they work. For somebody who just wants to do his work and go, or her work and go, what will likely happen is you see them, just doing the bare minimum to survive, enough to be seen as productive, but they might have more capacity within them that they won't give just because they feel like this is just something I do by the side and it just work, right? But for someone who has that extreme level of ownership, that mentality of ownership, the way they are involved in the work is, completely different. The level of energy they put into it is usually very different. Now, for someone like that, if you're not giving them the autonomy to drive things and make decisions and make mistakes, you're going to stifle that opportunity for them to be innovative, right? So that is why autonomy is very, very important. You have to create that environment where people can do stuff. You could catch up with them. In fact, if you're the one managing them, your responsibility is to clear their path so that they don't have to stumble so much, clear their path so that they don't have obstacles that will prevent them from moving forward. But ultimately, it is their business to run as fast as they want to run. So another thing you need to consider is you have to try as much as possible not to punish people for mistakes, because some of the key learnings you will ever have in your career are learnings that you get from making mistakes. Mistakes are inevitable. They are inevitably intertwined with being successful. So if you're punishing mistakes, then people will be scared of attempting something new, which will also stifle innovation. However, you need to be conscious of when such mistakes become a pattern. If somebody is making the same mistake over and over, over and over, over and over, then it becomes a problem because at that point, they are not learning from it. It's either it's a problem of capacity or they are deliberately making the mistakes to piss you off. So you have to be conscious of that. And that requires a special handling, right? But you must create an environment that doesn't punish people for making mistakes, because that is the only way they will learn and get insights. And from those insights, it will surprise you how creative solutions will emerge, the kind of creative solutions that will emerge. So I think I must have echoed, the answer to this question in my previous answers, but I'll repeat some of them for clarity, right? Security is a very critical part of building a banking infrastructure. But you need to find a balance between security and agility. Now, the implication of this is when you're conscious of the fact that you have to find a balance, then the question you ask yourself would be, where is the right balance? At what point do I say, okay, this is fine, we need to go to market, so let's leave out these other things? And there are certain ways to answer that question. One is knowing that there are shortcuts that you should never take, which implies when you're building an infrastructure, you have to lay the kind of foundation that will help you survive. So you see, it takes you back to the original answer I gave. So you need to make sure you lay the kind of foundation that will help you survive. See, imagine you're building an API that helps transfer money, and then you roll it out without authentication, for instance, just because you need to go to market and you're hoping people will not. It will shock you. That day you're deploying it, people already know, this thing doesn't have authentication. Even if you fake it and put something like authentication that looks like authentication just to make it look like it has, they will figure it out. And before you know it, they're already moving money. So there are certain shortcuts that you can't afford to take. So, which means laying those foundations that will help you survive should be the bare minimum that you need to have in place from a security standpoint before you roll out. It is better to roll out a bit late than to roll out and get into a shitload of trouble with your customers, because your reputation is your currency with them. If that reputation is damaged, it could be very expensive to repair. So pay the price and take your time to lay those foundations needed for you to survive, first of all. Then you can think of going to market really, really fast. Now, another thing you have to consider is when you've laid the foundation, you could then start creating things that will make you move faster. For instance, you could start creating very reliable pipelines to validate whether your application has a problem or not before you deploy them. And if you do a deployment and then you see there's an issue, you should be fast enough. And that is what agility is about. You should be agile enough to respond and fix those problems before they become existential for you. So lay foundation, start deploying, build a pipeline to validate what you're deploying so that you make sure that at least you have comfort before you take things to production, then be agile enough to respond if anything changes. The aspect of building a pipeline is very, very critical. If you have an automated pipeline, you can potentially drive down your lead time to change significantly because the process that your services or your products will have to go through before they get to production can be automated with machines, and machines don't get tired, right? Those things can give you the comfort you need and get you to where you need to be as fast as possible without sacrificing quality, right? So that is, from my perspective, or in my opinion, these are some of the ways to make sure that you find a balance between security, agility, and innovation. The principles that will make you scalable and adaptable are some of the principles that will make you future-proof. When you're building a future-proof infrastructure, you're basically saying, I want to be adaptable to the future and I want to scale, because from where you're starting, you probably have maybe one customer or two who are your family members. But you want to grow to a point where you have millions of customers using your platform. That is scale. You want to also grow and be able to respond to customer changes or customer requirements or business requirements as you evolve. That is being adaptable. So what do you do? From the perspective of growth and adaptability, you can still, taking us back to the example I gave, when you lay a foundation when they say a house is a carcass, right? You just build and there is nothing, but there are solid pillars to hold the structure. Then down the line, you now realize you need to paint the house, or you need to even plaster the house. You could decide the way you want to plaster the house, you know, and then you say, okay, I want to paint the house. You could decide what color to paint the house. Maybe when you started, the color in the neighborhood is blue. That's a trending color. But 2 or 3 months down the line, when you're ready to paint, the color has changed and it's now yellow. So because you've laid a solid foundation, it doesn't matter. You just go ahead and paint your house yellow. And maybe at the point you're trying to add windows, the trending windows have changed. You can add the kind of trending windows you prefer, right? It's possible when you started, you had a diagram that showed the kind of windows you wanted, but those diagrams can be changed easily. Just knowing that, okay, you've laid a solid foundation, you could add the things you need, add the bells and whistles down the line. So it is the same concept. When you lay a good foundation for your banking infrastructure, you're preparing yourself to be adaptable to the future because business requirements will change. How are you able to respond to them without breaking your system apart? There are certain times you need to tear down what you've built already. It happens. And sometimes the reasons are valid, but most times it's better if you've built in a way that you don't need to tear down everything because that would reduce your speed to market. It will slow you down. It's better if you already have something that you could just add to and then you go live. And that keeps you nimble and adaptable. So the principles are basically the same. The moment you are able to lay very solid fundamental foundations without the, the bells and whistles, and you are now sensitive to the market, paying enough attention to know what to add and what not to add, what to remove and how to add it and all of that, you will be able to adapt to the market. I will give you a very simple example. When we launched Moniepoint, some of the services that we started with were services that were built for something else entirely. Let me not say when we launched because I just realized that when we started, we were called Team Out, and that was why I said when we launched Moniepoint. But remember that Moniepoint as a product started before we renamed the whole company to become Moniepoint. So when we launched the product, we were building something for agency banking. Do you understand? We were targeting customers who are agents and who are sitting in street corners carrying out agency banking transactions. When we decided to evolve to become a full-fledged banking platform for businesses, we didn't have to change our services to do that. It was easy to evolve to accommodate businesses and even retail customers. I know last year we launched the retail uh, product for individual customers. And I'm just saying it here. We didn't really have to change our services to actually, I mean, we didn't have to change the fundamental structure of our services to accommodate these new customers. We just had to add on top of it, make little modifications here and there. The main work we did was building a mobile app for this set of customers. And even in building that mobile app, we built it in such a way that both the business app and the retail app are from the same code base. So this is about being adaptable. Where we started from and where we are right now are a bit different. But the infrastructure we've laid, the foundations we've laid were solid enough to cater for this new customer set. And I think as we grow, there will be new modifications that would happen, and it wouldn't be a problem to accommodate it. I think the way to look at strategy is more or less, the first thing is whatever you're building is to support the business, right? Everything you're doing from a tech standpoint is just to make your customers happy. So your strategy has to align with that. Now, let me give you a very simple example. If I am building a social network that has nothing to do with, let's assume, it's a free social network and it has nothing to do with financial transactions, the way I will build it will be different from when you're building a banking infrastructure because the kind of customers you're targeting, it could be the same people who would use a social network, but when they are using your banking infrastructure, they are coming as a different kind of people. At this point, they are dealing with financial things and they have very little patience when it comes to money. So the point here is your strategy from an infrastructure or tech perspective is most times informed by the business that you're running. When you have that alignment with business, the next thing is execution. Execution is more or less thinking of the best ways to allow the business achieve their objectives. You could say, okay, I'm building a payment gateway. What do I need? What kind of tools or frameworks or stack am I going to use to build this payment gateway, considering the requirements of the business to their customers, to the customer. So these are the things that inform what the strategy is. So it's not a one, what's the word now? Something fits all. Thank you very much. It's not a one size fits all. It's situational based on your own specific situation or the kind of business you're running. That will determine what your strategy is. But there are some basic no-brainers or processes that you cannot live without. One is you must monitor, for instance, performance of your services. Two is you must monitor the quality of what you're building. You must track it. Three, you must also track the performance of your teams. So all of these things, some of the basic things that, regardless of the kind of infrastructure you're building in terms of strategy, you should have these things because they will help you see where there are bottlenecks or optimizations or performance improvements to be made, and you can then take action. Now, how do you measure? What are the metrics that you use to measure these things? I will speak to the basic, some of the basic metrics because the other specialized metrics are specific to businesses, the kind of business you're doing. And we could look at it from a standardized perspective, right? You don't need to reinvent the wheel. There are existing standards out there that it can, you can use. One of them is the Dora metrics, which some guys in Google did a lot of research in, and so if you look at the Dora metrics, there are four key things that you're measuring. You're measuring deployment frequency, which is how often do you deploy? Because the frequency of deployment determines or somehow tells you how solid your pipelines are. If your pipelines are very solid, then you have the confidence to deploy more often. But if your pipelines are flaky, it means before you deploy, you have to be, then you could wait for 1 week or 2 weeks, test it. Let's be sure it's fine. The other metric is change to failure rate. When you eventually deploy, how often do those deployments fail? That kind of metric will also tell you the quality of what you're doing. There's mean time recovery, which is we know things will go wrong, but how fast do you recover from them when they go wrong? And there's lead time to change, which is how long does it take you to move from development to production? So, at least from the research, these metrics can help you determine how well you're doing from an infrastructure standpoint as a business. You see that it's heavily dependent on DevOps, but it's like a summary or a constellation of all the other background works that you're doing being crystallized into four metrics to help you have an idea the quality of your infrastructure, right? But there are other metrics, and people can adopt whatever they are comfortable with. For instance, some people can track things like the success rate of their services. They can track error rate. They can track latency. There are several things you could track to help you see the different aspects of your infrastructure. There are things like tracking something called the user misery. Some call it AppDex, which typically shows you how happy the users are using your platform. Because whatever you've done, if the users are not happy using it, then you're wasting your time. So these are some of the things that can give you ideas of how well your infrastructure strategy is doing. And then from this perspective, you can identify the levers that you need to pull to improve, the output or the results. So luckily, right now, we're beginning to embrace it within Nigeria, right? Embedded finance is not new. It's not a new concept in other parts of the world. And where I see it headed is you have a lot of, before I go in that direction, before now, you could agree with me that it was difficult to actually integrate with banks. It was actually quite difficult for you to, as a startup, gain access to. Some of the banks didn't even have APIs to expose to you. They were building those APIs as you need them, right? So most times people just give up, right? Or look for a way around it that doesn't require them to integrate with the banks. But the moment the banks start exposing their APIs and making it very easy to integrate to, there will be a totally different set of entrepreneurs who would take advantage of that. And they will build products that you couldn't imagine were possible. The reason is once you make certain things available, people start thinking, they start seeing opportunities and they start building things on top of it. And that is what I see happening in the next couple of years. as more banks are becoming freer in opening up their APIs and allowing startups to integrate, you will see innovative solutions, innovative products riding on the framework that the banks have built already. Luckily, I mean, I can't believe I'll be saying it, but it is considered that most traditional banks, integrating with them is a pain and they are mostly unreliable when it comes to APIs. But that is changing. Now you have banks who are evolving their APIs here in Nigeria to become very reliable. You have the likes of Moniepoint also, who from the get-go were building for reliability for our customers. Now, there are a couple of other players in the field with the same level of strength and capacity. The moment all of us start opening up our APIs to startups, then these startups will worry less about banking and just focus on building the product they need to build, riding on what the banks have provided for them. And I can tell you that the banking industry in Nigeria is quite mature, right? The truth is, let me just give you a very simple example. Instant payment, which you have today, your NIP transfer, that if you transfer money from your CGT to Zenith and it hasn't reflected, you start crying. "Ah, what's wrong with you guys?" In some countries, when you transfer, you have to wait for 5 days before it, before it reflects. But some have also cracked it. Once you do a transfer, it's instant. But the point is, Nigeria is actually quite there when it comes to payment infrastructure. So there will be a lot of opportunities for innovation and creative solutions the moment the banks start opening up their APIs to, startups. And that's already happening as I speak. They are actually already opening it. So yeah. You can't build what you don't understand. But I also know that you might not be able to understand everything before you start building. So the advice I have is try and understand as much as possible so that you can correctly identify the critical components that you need to survive. If you're building in an environment or in a domain that you have no clue about, you're likely going to build nonsense. If you succeed in building the right thing, it will be a thing of luck, right? So, but it doesn't mean that if you don't understand it, you should not try to build. The only requirement is if you're going to build it, even if you don't understand it, the moment you've made up your mind to build it, try and understand it as much as possible. Get as much context as possible. Something would say at Moniepoint, clarity and context is king. If you have clarity and you have the right context, you'll be able to make the right decisions. So it's extremely important that you have such if you're trying to build a banking infrastructure. And when you have such, you're able to identify the critical components you need to survive. And then you can then lay the solid foundations you need to be adaptable to the future, to be future proof. Now, the second thing is you should just build enough to sustain the structure of your goal, of your business, which boils down to what I've said before. You don't have to finish a comprehensive product before, put all the features before you go to market. Just build enough to sustain the structure, then go to market. The rest of the modifications you will make, the rest of the learnings you will have, the rest of the changes you will make will most likely come from feedback that you get from your customers. And what that gives you is you're then able to build effectively to solve your customers' problems. If you're locked up in your high towers or in your, and you're a smart guy, a brilliant engineer, you're just building very complex systems because you can, you might likely build something that will never be useful to the customers on the street. But if you just lay enough foundation to go out into the market, then you just become a sponge, absorbing all the things that are thrown at you from the customer's perspective and then evolving your system to become the kind of product that the customers love. The essence of every business is to make money. At least there's an aspect of impact. But let's even talk about the money part, because that is what takes into business alongside other reasons. So, but if you're not solving your customers' problems, you might not be able to actually achieve that. This is why it's very important to pay attention to the feedback you get from your customers. And that feedback, you don't need to actually have a complete product to get it. You can start somewhere and then evolve.